Good afternoon, ladies and gentlemen, and welcome to the 888 Holdings PLC acquisition of William Hill investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet company dashboard, and we notify you by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you'd be so kind as to give that to your attention, we'd be most grateful. And I'd now like to hand over to Itai Pazner, CEO, and Yarif Dafna, CFO from 888. Good afternoon.
Good afternoon, everyone, and thanks for joining us today to discuss a transformational deal for 888. I'm joined today by Yarif Dafna, our CFO, and Vaughn Lewis, our CSO. I'll just quickly touch on the key highlights on slide 3. Then I'll hand over to Vaughn to explain why this strategically is such a positive deal for us. And then I'll expand on how this combination positions us as an enlarged business for future growth. And then Yarif will explain why this is so compelling from a financial perspective. We will then open up for some questions. So firstly, a bit about the business we are acquiring. William Hill International is all of the original William Hill PLC except for the US business. It includes all of the technology and the brands, and critically, all of the talented people with over 10,000 of new colleagues. As a result, this transaction significantly enhances the scale and diversification of the business, particularly in betting. We create a regulated market leader with really strong positions across some of the most attractive global markets. We will massively enhance our management capabilities, bringing in some talent from across William Hill businesses. We will also see a step change in scale. All of the benefits that come from that, including enhanced margins. With leading products and brands across betting and gaming, we will really enhance our player propositions, and adding retail gives us a great new channel to engage with customers while building our brands, which we are really, really excited about. Yarif will cover the financial details later, but I would just like to say that we have reviewed many opportunities in the recent past, and I really believe that this transaction propels 888 into a very strong position strategically, and the financial returns will be attractive. I'll now hand over to Vaughn to run through some of the strategic attractions of this deal.
Thanks, Itai, and good afternoon, everyone. Thanks for joining us on this call. So this is a combination that's been discussed many times in the past, and it's great to be part of it happening now. And look, the reason why the combination has been discussed so many times is that the strategic logic is just so powerful for this combination, and that's what we've outlined on slide 5 here. So we'll have a more diversified revenue mix, in particular increasing our exposure to betting, which is the largest and fastest growing online vertical. Our revenues here will grow by about 5 times as a result of the combination. The combination also strongly enhances our positions in key regulated markets, and these are the most attractive markets with the biggest growth potential. The step change in scale will boost our margins. We'll bring in loads of outstanding talent to support our combined growth plans, and we'll continue to create best-in-class products, combining the best of both 888 and William Hill. So strategically, there's huge attractions here. It's a combination that creates a business that is bigger, better, and stronger. And on the financial side, Yarif will cover the details shortly, but alongside propelling 888 into a very strong position strategically, the financial returns here are really attractive. So turning to slide 6, primarily this deal is about delivering growth and positioning the enlarged business for superior growth. Digital betting and gaming is an immature industry still, with only under 20% of all gambling taking place online, and years of strong structural growth still to come. The enlarged scale of the combined business will put us in an even stronger position to benefit from these growth trends, as well as giving us more capabilities to prosper through changing regulations, technologies, and customer preferences. This is a really strong virtuous circle for this combination, which we show on the right. So the step change in scale gives us more capacity to invest in future growth. The combination of the amazing 888 gaming brand and the iconic William Hill sports brand gives us a really powerful brand platform to deliver future growth. Combining our best-in-class technology and products will further improve customer experience, driving up share of wallet as we broaden our engagement with customers, including through a really strong omni-channel opportunity. And our scalable technology will enhance our operating leverage, providing more funds to invest in future growth. I'll now hand back to Itai to expand on the opportunity.
Thank you, Vaughn. Over to slide 8. I'll start with a bit of an overview of the combination and why we're so excited about this transaction. 888 is a technology and gaming DNA, business by DNA, with a scalable global platform and huge digital capabilities. Our brand is recognized by customers as a world-class gaming brand. William Hill is a bookmaker by DNA with an iconic betting brand that is instantly recognized across the UK. We are both digitally led, consumer-focused, and committed to player protection and raising industry standards around safer gaming. Alongside these solid foundations to both businesses, we have both made great operational progress in the last year or two. And as you can see, the strong momentum is in both businesses is here and happening right now. We reported our results last week, but you can see on the slide how impressive the last 5 quarters have been. William Hill is also flying with around 40% total online growth in the first half of the year, and over 50% growth in its UK online division, taking significant market share. The combination of 888's technology and gaming-led business with William Hill's sports-led business will create really powerful and large business. Underpinned by its scale, technology, talent, and brands, the enlarged business will be really well placed to drive continued growth. Moving on to slide 9, we show the new makeup of the enlarged online business by geography and by products. As you can see, the combined business will be diversified, with about half of online revenue coming from the UK and over 80% of online revenue from regulated and taxed markets. The gaming and betting split would be 70-30, significantly increasing our betting exposure, as Vaughn mentioned before. Slide 10. The combination will put us in a really strong position in some of the largest and most attractive online betting and gaming markets in the world. On this slide, our top 10 regulated online betting and gaming markets. You can see the combined share. We already have about 5 to 10% in most of these, with a top 3 position in UK and Spain. As you can see in the charts, the combined market share will be over 12% in the UK, over 10% in Spain, and nearly 7% in Italy, as well as around 5 to 10% across a number of other exciting growth markets. This gives us top 3 positions in the UK and Spain. With a combination of our brands, products, and operating skills, we are really placed to build a top 3 position across these markets. As well as materially enhancing our market share positions, the enlarged business will be more evenly split between betting and gaming in these markets. Turning to slide 11, the combination of William Hill and 888 doesn't change our existing plans in the US, which are based on the newly established SI Sports Illustrated Sportsbook brand. SI is a really strong American brand with a large and growing customer base in the US. Partnering with this brand allows us to invest much more selectively in the US, with a clear focus on using SI's brand footprint and positioning to acquire customers more effectively and to build a profitable business over time. I'm pleased to say that we successfully launched SI Sportsbook in Colorado last week, And we're really excited about the opportunity to enhance our US growth plans with our significant additional sportsbook expertise that William Hill brings to the table, including from prior operations that they already had in the US. Moving to slide 12. One of the things that excites me most about this combination is the ability to support and enhance our product leadership strategy by leveraging a range of top quality products and features to really enhance our customer experience. William Hill has totally repositioned its product set in the last 12 months and has loads of brand new features and products. The further we went through this process, the more impressed I was with what William Hill has been doing. We share really clear product principles built around engaging products that are quick and usable and content rich. These products always have safer gaming in their core, and we will ensure scalability by combining the best of breed products, building them once and deploying them globally. This opportunity to drive revenue synergies from areas such as product enhancement and sharing of content is one of the really exciting aspects of this deal. Slide 13. I'd like to expand now a bit more on the retail business of William Hill. We're really excited about the retail business and see a real brand benefit here. Having an estate of 1,400 shops across the UK, helping to build the brand awareness and trust around William Hill. The management team have done a great job with the retail business. The estate has been right-sized, reflecting first the changes in regulations for gaming machines, and then the impact of COVID-19. While there were undoubtedly some difficult decisions for the team and a very difficult period for some of the colleagues, our due diligence work suggests it has put the business in a really strong and sustainable position, with a high-quality estate run by thousands of friendly and knowledgeable shop floor staff. William Hill is the highest rated retail brand for convenient location, which is one of the most important drivers for customers' traffic in the UK. It is a really strong brand with a loyal customer base and is the most recommended brand as a result of that. The management team have loads of exciting plans, bringing in new technology to both betting and gaming. As part of this, we see a really big opportunity in omni-channel, enhancing the customer experience for people who bet across both retail and online. I'll now hand over to Yariv to outline how compelling this transaction is from a financial perspective.
Thanks, Itai. Good afternoon, everyone. On slide 15, we can see some of the key financials. I hope you have all had the chance to read our RNS with some of the key financial highlights, but just to quickly touch on the price, it is 2.2 billion, which represent a 2.9x multiple based on normalized 2020 EBITDA. Given the strong current trading, if we use the last 12 months to May, the price represents approximately an 8x multiple or 6x post synergies. Based on comparable multiple in the market for similar transaction, this represents a compelling price for a top quality asset. In terms of numbers, the enlarged business would have generated just over 2.5 billion in revenue on a normalized basis in 2020. The waterfall chart here breaks out the key component of this, and it is important to note that this is an adjusted figure reflecting estimates of the full year trading in retail. The deal will triple our revenue and EBITDA. In terms of EBITDA, the enlarged business would have generated 464 million in 2020. As you can see in the waterfall chart, this reflects the 156 million from 888, together with the contribution from the three key business segments of William Hill, less its corporate cost. We expect significant enhancement of our adjusted EPS in the first year of probably over 50%. From a financing perspective, we have committed funds to complete the transaction. However, in order to provide a more favorable mid-term capital structure, we plan to raise approximately 500 million in new equity at the appropriate time, which would give us pro forma leverage under 4x or around 3x on a fully synergized basis. Given the strong cash generation profile and our expectation to reduce leverage to below 3x in the medium term, we currently have no plan to change our dividend policy, which, to remind you, is distributing 50% of our net profit. Moving to slide 16, the combination significantly enhance our scale, and this step change will enable us to generate significant synergies. We expect cash synergies of 100 million per year by 2025, with a gradual phasing of these synergies. We expect a little over half of this in year 2, reflecting our plan to focus on business momentum and take time and consideration to ensure we capture the best product and technology from each of the businesses. We expect the cost to achieve these synergies to be around 1x the annual run rate, which means about 100 million. It is important to note that staff cost synergies are not material part of the plan. Most of the savings are enhanced scale driven and coming from cost of sale, marketing, and technology. One of the most important attractions of the William Hill business is the strength and depth of the management team and the employees. We are really looking forward to working with them to position the enlarged business for growth. With that, I will hand back to Itai for some concluding remarks.
Thanks, Yariv, and thanks, Vaughn. Just to conclude, this is a really attractive transaction for 888 and William Hill International, and we will drive shareholder value as well as positioning the enlarged business for future growth. It creates a more diversified business that is a leader in regulated markets with increased scale, huge product and technology capability, and a financially highly attractive combination. With that, I'll be very happy to take some of your questions.
Itai, Vaughn, Yariv, thank you very much indeed for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab that's situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Vaughn, perhaps I could, if I could hand the Q&A session back to yourself, if I could ask you where appropriate to read out the questions and of course give a response, that'd be fantastic.
Great, thanks, Mark. So we had a couple of pre-submitted ones. So the first one for Yariv, would you reduce or increase the amount of equity to issue if the share price moves ahead of the deal closing?
So it's very important to clarify that, we have a complete package for finance this deal even without the equity. So we are not dependent on the equity in order to close the deal. The equity that we plan to do is in order to have a better capital structure. This is our own plan, and we will do that at the appropriate time. Depends on, of course, market condition.
Right, another pre-submitted one. Would the outcome of the UK regulatory review on online gambling, if that's substantially worse than you expected, could you renegotiate the terms of the acquisition?
The answer is no, but we, as part of the due diligence, so we share very similar view about the regulation in the UK with the seller and with the William Hill team, and this was all factored into the transaction, and so this is not open for renegotiation. There is no condition like that in the agreement.
We had a few questions from Andy M. Thanks. He said, great acquisition. What do you see as the greatest challenge in integrating William Hill into your existing business?
Yeah, so I'll answer that one. So it is indeed a great acquisition, and it will require integration in the future. I think the key challenge in this case is to make sure that we keep all the talent across both sides of the deal. So 888 and William Hill, we believe we have great teams, people that are very good in execution. We have to go through a planning phase now. So the deal was signed but hasn't been completed yet. So we have a lot of planning ahead of us. We're not planning to create a huge amount of disruption in the first, let's say, 12 to 18 months. We will plan between the teams together. Like we said in the presentation, we're going to find the best pieces of technology on both sides, combine them in order to offer our customers the best experience that they can get, which will be better than the experience that each company could do individually, because we will have more resources, we'll have the best teams in place, and we'll have the best parts of the products from both sides.
The next one's from Andrew. Will retail investors be included in the share offer?
So the equity raise plan is not yet fully defined, but it's likely to be a right issue. So of course, all the shareholders will have the right to participate.
One from Simon C. Do you think the combined entity will enable you to expand globally quicker?
Yes, we do think that the combined entity will be able not only to expand quicker, but also to gain more share. So essentially, both companies, if you look at in the plans, in the expansion plans, both companies are going after the exact same markets, aside from the US, which was obviously split out of William Hill, which was one of William Hill's ambitions in the past, and that's one of the reasons that Caesars acquired them. But if you look at the European and global landscape outside of the US, we both have very similar ambitions and targets, approaching them again in a unified manner, with unified marketing budgets, unified products, means that we will be able to concentrate more efforts into those territories and gain larger shares. As the industry consolidates more, as there are more regulatory adaptations and changes in the markets, we feel that this combination can create a much better position from a market growth and market share perspective for the combined entity.
Thanks. So a couple of similar ones from Karen H and Andrew R asking about the property portfolio of William Hill. I'll take that and just say, look, there's a relatively small number of freehold properties within the 1,400 shops, but it's not material, and the majority of those are leased on short-term leases. Another one from Andrew R. Do you think it's just disappeared? But do you think there's a strong future for the retail estate, or is all the growth going to come online?
So I think retail is a stable business that's delivering a stable cash flow and profitability to the business, which is really important, specifically in this period, but in the future as well. We do not plan to do any kind of significant changes in the retail estates. The team at William Hill have been very busy in the last 18 months working on technology in different parts of the business. One of their biggest projects is actually a retail project and technology, which they're starting to roll out now. I think that could come with additional benefits and upside once they manage to operate the retail with a modern technology stack, which will enable the teams there to do better omni-channel activities. So basically to offer customers who we know are going into their shops and also bet online, to do that across William Hill brands, both online and in the retail outlets.
Great. A couple of similar ones on debt for Yariv. So from Brett L and Karen H. So the cost of borrowing of 2 billion doesn't seem to be in the figures. What should we think about for that, and how comfortable should investors be? Sorry, from Mick B, we'll come to Brett's question. And then what is the number of years definition for medium term to reduce leverage to 3 times?
So I will start maybe from the end. So we are expecting not more than 2 years that it will take us to go below the 3x leverage level. In terms of the cost of the borrowing, so of course, this is not yet in the public domain, and when the time will come, so we will provide all the details, but I can say that we managed to secure good terms for the financing package.
And then one from Brett L for Itai. Do you plan to invest substantially more in the US now?
Yeah, so we have solid plans to roll out in the US. We just launched the first Sports Illustrated market in Colorado a few days ago. We're looking forward to see how that launches and to get feedback from customers. We're really excited about that launch. We have a plan to roll out 4 additional states in the next 12 months, and we are working on additional licenses. And the plan for us in the next 3 years is to launch about 3 to 4 states per year in the US market. We think this deal, which is actually significantly increasing our free cash flow, will actually support and help us invest further in the US. And another very important element, there is staff in William Hill that operated and helped in building the US platform of William Hill. And they're very familiar and knowledgeable about the US market. So I think that will only enhance our abilities there. So in general, the answer is yes, I do think this is actually a positive move that will help US expansion move faster and further.
And while we're on the US, one from Graham H. follow, are Caesars going to use the brand name in the US, and won't this get confusing?
Are Caesars going to use the brand in the US? Well, they are using it now. Their future plans, I think it's better probably to ask them. They have the right to use it in the US. I'm not sure what exactly their plans are. I don't think it's really confusing across both sides of the ocean. They can use William Hill in the US in retail as they did up till now. And from our perspective, William Hill, the main assets of William Hill as a brand are specifically in the UK and some of the other countries in Europe which got exposure to William Hill, like Spain, like Italy, and that's where we have obviously full ownership of the brand.
So from Karen H, one on Synergies, does the 100 million of Synergies include the expected impact from UK regulatory changes on a net basis?
Yeah, so I wouldn't mix the two issues. We do have a plan that suggests impact coming from the regulatory change in the UK, and regardless this, we have an estimation of 100 million that synergies that we can generate from the current businesses as they trade today.
And then what looks like the final one from Carl T. How do you see the dividend progressing?
So as I mentioned earlier, so we didn't change our policy, and we do plan to continue to pay pay dividend according to the policy, which suggests distribution of 50% of our net profit.
It looks like there are no more questions, Mark.
Perfect. Vaughan, thank you very much for hosting. A great job, and to Itai and Yaref for your responses. And again, thank you to investors that have taken the time to submit those questions. I know investor feedback is important to the company, and I'll shortly redirect investors to provide you with their thoughts and expectations. But before doing so, Itai, perhaps I could just hand back to you just for a few closing comments.
Yes, thank you. Yeah, so we're very excited about this transaction. It sets us exactly in the place that we wanted to be, which is one of the top European operators immediately, and very well positioned to take a leading position in the global gaming space. So I wanted to thank everyone for joining us this afternoon, and have a great evening today. Thank you.
Itai, Yaref, Vaughan, thank you very much indeed for updating investors today, and congratulations on your transaction. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of 888 Holdings PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and good afternoon to you all.